I mean, Bitcoin is the only asset that has been underperforming a year ago until now. It's actually down since November 2024. That was the first time that we reached 100K and higher. And since then, it's now beneath 100K. It has done nothing. What is making this, or what makes this cycle so different from the previous ones, in your opinion?
Yeah, so we're moving into Bitcoin is becoming an institutional grade asset, and so we're actually. So what I think is happening is that we always had diminishing returns within Bitcoin, and if you extrapolate like from the previous cycle peaks to today, you would kind of get to the returns we're currently at, and so it's not that strange that we're at these price levels. Although without the parabolic move, we are at these levels now. And so in a way, that's much more sustainable, obviously. But it means that that hodlers have been taking profit earlier on, like without seeing like those parabolic increases. And so I think that for the Bitcoin cycle to move forward, we're going to see more a continuation of that gradual institutional interest. And so at the market cap that we're currently at, it's about 2 trillion. Retail capital isn't that influential either. So obviously we have not seen even a similar influx of retail compared to previous cycles. But the influx that we have seen has also less effect at these price ranges. So like a normal person doesn't have an extra 100K usually in their bank account to put into Bitcoin, whereas when Bitcoin was 10K or 5K before in previous cycles, that capital had much more impact on price. Now, of course, we do want to attract institutional capital, which is exactly what's happening. And I think the ETF approval, and it's for a good reason that we saw an all-time high before the halving this time. It was the ETF approval, which was actually a change in cycle structure. It was the moment that Bitcoin officially became more of an institutional grade asset. We got BlackRock behind us. And since we have seen basically all positive news playing out, we see actually an increase in institutional interest in Bitcoin. We'll have some charts on that soon. And so everything is actually moving perfectly well, except that people are kind of disappointed with this price at 100K. But so what I believe to be happening this time is institutional capital is moving slightly more gradual into Bitcoin. We get even passive flows that are moving into Bitcoin, and institutions only are getting their feet wet. And they're buying a lot of Bitcoin also through these custody solutions, which is, in my opinion, very natural. I mean, you're a new player in this market, and you buy through the ways that you're used to, like ETFs, for example. And but yeah, we have not seen as much hype. Since that ETF approval, hype has never reached that same level again, and it has kind of been fading until now. And so, but we still see the influx of institutional capital, which is exactly what we want to. But there is sell pressure from that previous hodler group.
Yeah, I think the institutional interest is super important, and on all levels, the entire ecosystem is expanding. I've been to New York last week. We can see that a lot of institutions are adopting stablecoins, might not be into the vision of Bitcoin, but ultimately, if they onboard through stablecoins, it will get to Bitcoin at some point. But the question is more or less that you mentioned the supply shock of the halving, but then there is also the buy pressure through the ETF in institutions. The reason that we're currently at 100K is primarily due to the ETF.
I agree. Yeah. So Bitcoin has always historically moved in this 4-year cycle, and the halvings are obviously heavily correlated. But the question is that correlation also causation? So, and I believe that in the beginning, the halvings definitely contributed to having these parabolic moves in Bitcoin that we saw. So we got these blow off tops, but at the current stage, they only have a marginal impact. So as I also mentioned in the Bitcoin conference talk, if we wouldn't have had the fourth halving, We're currently more or less around 20 million coins in circulation, almost. We're there. So only 1 million coins is missing. But if we wouldn't have had that halving, that million coins that is missing would in the next 2.5 years basically be included in that circulating supply. And so it's still 1 million coins less that are because of the past halving are not getting into the market. And so if we would have an extra 1 million coins of sell pressure, that's a pretty heavy thing. So the halving still has a marginal impact. But if we look on a day-to-day basis, so it's 450 Bitcoin per day that is new supply issuance, and much of that is immediate sell pressure. But if we look at ETF flows or almost like passive flows into Bitcoin, those are bigger than that sell pressure. So I believe the halving has a marginal impact, but indeed the ETF flows and institutional demand is much higher than the supply. Now, with that, we obviously also get supply on the market, and that I think that's the major change also this cycle. We get supply from that hodler cohort, which basically has been betting on Bitcoin for the past years, and maybe we should move to the next slide to explain this a bit. So each class of Bitcoin that entered at a certain moment in the cycle, they're all sitting on those enormous gains. And in this chart, you see the price as well, and you see that those diminishing returns, which diminishing returns are not only due to an increase in market cap. As I said, like retail capital has less influence at these 100K prices than it did when it was at 10K, for example. But besides that, we also get compounded sell pressure from all the previous cycles. So it's not only sell pressure from the previous cycle where people only had like more or less a 10x gain. It's also from the cycle before that and the cycle before that, and so you get like an order of magnitude of gains more. And so for people of 2013 or even 2017, these prices of 100K are very attractive to have a bit of a change in their lifestyle. And I think most of that sell pressure is not because of a loss of conviction in Bitcoin, because Bitcoin is actually doing perfectly well. Like we actually have this measurable institutional adoption. We have all these like positive things playing out for Bitcoin. It's only becoming better. And that's why I really like the analogy of the IPO moment. I don't know if you've seen that on Twitter. Yeah, so it was Jordi Visser that came actually with this analogy to call Bitcoin currently in its IPO moment. So if you have a company that VCs invest in, once that company goes public, they call it the initial public offering, which is the IPO moment for that company. Yeah. The stocks become tradable basically for the average investor to start investing. But obviously the people that early on invested into that company, they are then taking some profit, into that when the stock goes public, which is a natural process. They took an early bet, that company was going to be successful. And then once it's successful and it gets basically on the public market, traded on the public market, now they actually can take some profit. And I think that's also, it's quite a beautiful analogy for what's happening. So we have kind of converged with those diminishing returns to a situation where we now only are at a 1.8x upside, which isn't all that much. But if we would even continue cycle further, then, are we going to have like a 1.1x upside? Like that would be like such a marginal increase. So we kind of converged like over the past 17 years, like all the supply of Bitcoin has been mined with people that had high conviction of what Bitcoin was going to do. We actually see Bitcoin success being played out. We have institutional interest, nation state interest. There's game theory playing out also on the nation state level with regards to strategic Bitcoin reserves. And so really nothing could be better. But we have 90% of that supply sit in the hands of people that took that bet and won and are now willing to change their lifestyle at these higher levels. And so I think that is what is playing out. And so I also think that will change the structure a bit of the cycle of the cycles to come for Bitcoin.
It's also, if we look at this chart, in some way, yes, it's diminishing returns, but if you look at every crucial level, for instance, $100 didn't take long to actually break through it, but then $1,000 became a little bit longer, and then 10K, I think we have been hovering around that level for like 6 months. And now we are hovering around 100K for nearly a year, which is it's a psychological level. So if once we start to really break through this level, you could assume that we're going to get another impulse move upwards. But then I think the diminishing returns topic is definitely an interesting one until you have such an immense amount of supply being added, or demand, being added into the markets, that it breaks loose of that. For instance, if we get a bigger adoption in terms of governments or institutions, we might see a longer cycle and break through that diminishing return pattern.
So I agree there. So we've always talked about the supply shock within Bitcoin, and you could say that the halving has caused like early supply shocks. But of course, what does a supply shock mean? It just means that there's a higher demand than supply at the current moment, and it makes price move up. People think like, okay, if you look at the inflation rate of Bitcoin, that's below that of gold. And so Bitcoin is moving into this scarcity. But of course, when price rises, there's always sell pressure from the existing holders. And as I said, so they are sitting on enormous gains. And so into the future, we first have to consolidate for a bit around these levels. So people are kind of satisfied with their life changes. And one important point there as well, I think Bitcoin is the perfect collateral out there to take a loan against your Bitcoin, but the options are still very limited in that regard. You would want to see, now Trump made more favorable regulation towards that in the US, but we haven't seen a US bank actually adopting that yet and offer loans against Bitcoin as collateral. And I think if it would be much easier to use Bitcoin as collateral, there would be also much less sell pressure from the hodler cohort, because it's not that I think people lose conviction. It's just that people want to make some changes in their lifestyles. And so if you look at the interest rates currently, those are like 10% and up for getting a loan against your Bitcoin, which is quite a risk. Like if you would use real estate, it would maybe be like a 3% rate or so. And so it's not really fair in that regard. And I think so we're still slightly early. I think those lending services will come as well, probably with like regional banks. And so probably first in the US, since there's more favorable regulation. And I think that would contribute to less sell pressure from that cohort. But we're just not there yet. We need to give it a slightly more time.
I think I had Dan Held here earlier, and he's a big advocate for Bitcoin DeFi. And he calls that the second phase, basically. Most investors are holding their Bitcoin, but it's actually not the most efficient way of holding your Bitcoin. You can use it, you can borrow it, and then get an interest rate for it or a lending rate for it. But the reason that it's not that big yet, I think, is we don't have the Clarity Act. If the Clarity Act in the US starts to be approved, probably we will see the same sort of adoption as what we've seen with stablecoins. But if we look at the chart and if we look at the Bitcoin cycle, what is actually moving the markets at this point, or what correlations do you see?
Yeah, so what you mentioned actually, the DeFi on Bitcoin, I think it will come. We see actually this now with Bitcoin being adopted by institutions. We also see Bitcoin treasury companies, for example. That's basically leveraging the fiat system to your advantage to get more Bitcoin. And so the same for DeFi. I think all these DeFi services I would place in a similar category, where you're going to leverage the current financial system to get, for example, interest on your Bitcoin. The question is, will that become sustainable when Bitcoin becomes the reserve asset? So I think, but I think it's a phase that we have to move through. I now look at Bitcoin. So Bitcoin clearly is this institutional grade asset. It's trading like an institutional grade asset. It's trading similar to the S&P and NASDAQ, for example. And so I believe that that will continue into the next cycle, we will see more gradual increase, and the gains are. We can basically not look as much at the past for Bitcoin's price performance that we're going to see now in the future. I think it's going to be moving in a different structure, probably correlated to the business cycle. So depending on liquidity, favorabilities, it will also impact Bitcoin. Even if we get a recession, I think Bitcoin will trade like this, like the stock market for now. It will not yet be seen as a hedge like gold. It's still too early for that. I think that's still like a cycle away.